Hi everyone, thank you for joining us on the Real Estate Investors channel. I'm your host, Bill Fairman. I have a wonderful guest today. His name is Carl Fischer. Now, Carl is one of the founders of CamaPlan, which is a self-directed IRA custodian. Now, Carl's got an interesting beginning to his real estate investing career. He used to be a rocket scientist working for the Kennedy Space Center. So, Carl, how's about filling us in on how you got started in real estate as a rocket scientist?
I graduated in engineering from Cornell University, and I thought launching rockets would be a fun job. And at that point in time, you know, the shuttle was supposed to launch 26 times a year, so we'd be launching something every 2 years. So I thought it'd be really fun. But my mom and dad were in real estate, and my grandparents on both sides of the family were in real estate, so it was just natural that I went into real estate, and I bought my first piece, you know, right out of college after I paid off my college loans.
Now, I understand that there's plenty of people out here that have heard of self-directed IRAs, self-directed retirement funds. How's about giving us the big picture on what a self-directed retirement fund is, actually?
Yeah, I mean, when I started out in self-directed, I learned about them in the early 90s, and you couldn't find out much about them. But if you Google self-directed IRAs, you'll find a whole Wikipedia page and a lot of other definitions. I even had a couple of lawyers give me a definition of it. But for the audience, what you really need to just remember is the self-directed IRA lets you invest in anything you want, except for a few things that the IRS prohibits. You know, specifically life insurance and collectibles, they don't allow you to invest in. Everything is exactly the same as other IRAs that people may be familiar with. If you're not allowed to invest with your brokerage firm now in real estate or notes or mortgages or any other alternative investments, it's because they choose not to do it. They basically will sell or they'll invest or have you invest in things that they sell so that they can make that money. And of course, CamaPlan has no investments to sell. Everybody finds their own investments, and we absolutely do not recommend any investments. No taxes or penalties are incurred to switch to a CamaPlan IRA, self-directed IRA. And CamaPlan, again, doesn't sell any of those investments. But think of it this way. Self-directed IRA, you simply change your stocks, bonds, and mutual funds for things you might understand, like real estate. I know you know notes and mortgages, precious metals, a host of other diversified asset classes that you can truly diversify your portfolio. Hope that answers it for everybody.
So it sounds to me what you're saying is that really whatever is in your wheelhouse, whatever you feel comfortable investing in, that this is what a self-directed IRA is all about, is being comfortable with your investments because you kind of know that business already.
That's exactly what it is. Invest in what you're comfortable with. Take the risk out of it. If you know something, you've alleviated a lot of risk. Funny thing about the stock market, and I've taken a lot of courses and I bought a lot of software, and you know, that red, yellow, and green software, and I'm just not good at it. But like I said, my family was in real estate. I feel comfortable about real estate, and it's been pretty well with me. So, of course, that's what I invest a lot of my IRAs in.
Now, I know you have your traditional IRA, your Roth IRA, your SEF plan, your 401k plan. What all types of investments can be included in a self-directed retirement account?
Those that you mentioned can be self-directed. A lot of people don't understand that you can have more than one of those accounts. You can have a Roth account or a traditional account, plus you can have either at work a SEP account or a business account or a simple account. There's other ones like teachers, unions, and a lot of government workers use the 403Bs, and after you retire from there, you can take those 403Bs and turn them into self-directed IRAs and do any of the types of investments. The ones that I really like are the educational savings accounts and the health savings accounts. My favorite is a health savings account because the money goes in with a tax deduction and it comes out tax-free if it's used for medical expenses. And those only came about in 2006 and 7. But that's the best plan out there that I know of.
Now, are those health savings plans something that could be affected by the new Affordable Health Care Act that has been passed recently?
They could be. Nobody's really sure. You know, I mean, there's, 22,000 pages in there, and they can't even implement it, this year, and they're waving off things. So nobody really knows about it. And right now they're still up. I still have mine, and I'm putting them in there. But I've got no idea where it's really headed for it. We just haven't had the time to figure out, search on those 22,000 pages and come up with health savings accounts.
Well, I have a feeling that the people in charge of implementing the program really don't have a grasp on it either. Now, I would like to kind of get back to the 401k thing, if you don't mind. I'm under the impression that a 401k is directed by your employer or whoever your employer has to direct it. Is that something that you can actually have self-directed, or do you have to have permission from your employer, or how does that go?
Well, it depends. A lot of plans have different aspects to it. It depends on how long you've been with the company, how old you are, the vesting rights for it. But if you're still working for a company, sometimes you can't get the money out. Like the NFL, it's very, very tough. We've had a couple of NFL players that wanted to do this, and I actually was talking to Troy Vincent, who was the agent for the players, and they just make it too tough to get it out of that 401k. FedEx doesn't allow it, but other companies, smaller companies, will do it. And it doesn't take much to allow it. If the president of the company wants to do it, they can just amend the plan to allow for in-service withdrawals. And the other way to do it is to say, hey, I want to outsource it. And most company plans will allow you to outsource it. You have to find somebody that understands what that is. But they can give us a call at our toll-free number if anybody needs help on that. And our phone number is 866-559-4430, or get in contact with us through our website at CamaPlan.com.
So what kind of assets can you invest your retirement funds in? Now, I'm on the real estate side, so I understand that you can invest in different parts of real estate. But for those who aren't familiar, how's about expounding on that a little bit? What kind of assets are available through your retirement account?
Most of the people invest in three different types of or four different types of assets that we have. One obviously is their IRAs by straight real estate. When I talk about real estate, which you mentioned there, that's raw land, single-family homes, duplexes, quads, twins, triplexes, trailer parks, parking lots, warehouses, industrial buildings, anything that you really want to buy in real estate. The second thing that's up on the list of a lot of people's alternative investments are notes and mortgages, and I know from Carolina Hard Money that you guys know about that. And they can buy existing or new notes, right? Generate a new note. They can buy performing, and a lot of the banks are selling non-performing notes nowadays that people are buying. They can buy secured or not secured, and obviously we don't recommend anything, but I strictly don't recommend unsecured notes. And those notes can be first, seconds, thirds, it doesn't matter. There's all different terms on them. They can be fully amortized, or they can be interest only with the balloon, or anything in between. The third thing that a lot of people invest in are private placements or private companies, that they have in town, and they know the boss, they know the owners, so they feel comfortable with that. The one that's really good is the precious metals. That's come up a lot in the last couple of years with the currency wars that are going on out there. And, there are certain metals that you can't buy, and you can get that information on our website, under our precious metals section. But, gold eagles and gold bullion, maple leaves, etc., silver. You can invest in all of those things. And I guess we have a couple of outliers. We have one guy that invests in Eagles tickets or other sports tickets. We have some livestock and a couple of timber rights and oil rights. If you look at some of those areas.
Now, when you're buying and selling real estate, making loans, do you have to be careful who you make these deals with? For example, family members?
That's a great question, right. And I didn't talk about that. They prohibit certain investments, but they also disqualify people that you can deal with. And those are, you mentioned it, family members. And when I say family members, it's a pretty narrow area. They want to talk about your wife is disqualified, you're disqualified, lineal ascendants and descendants are disqualified. But that doesn't mean that your siblings, your brothers and sisters, nieces and nephews, or aunts and uncles, they're not disqualified when it comes to IRAs. But then your partner is disqualified, and anybody who's a fiduciary with you, or anybody that may be in a trust capacity for you or acting with a trust that you're a big percentage of.
So, in other words, they're just making sure that there's no personal gain other than the gain that you get within your IRA. In other words, you can't make money outside of it. It all has to be focused on the IRA itself. You or your wife can't get a gain other than what's inside the IRA. Correct?
Yeah, absolutely. That's one of the rules we try to tell people. If you think it's prohibited, you just got to ask yourself, am I getting a benefit from what my IRA is doing? And if you can say, no, you're not personally getting a benefit, obviously you're getting a benefit because you're building up your IRA. But let's take an example. If a realtor wants to sell a house and her IRA buys it, she's not allowed to get a commission on it because her IRA bought it. Okay. But if she wants to sell it to your IRA, then she can. But she can't get a commission for her IRA buying it because she'd get a benefit today for what her IRA did.